Sometimes, things just matter. Like when help needs to get there quickly. When problems need urgent solutions. When small things are a big deal. When your big dream is just one step from reality, or new ways to grow are on the other side of the world, we know that behind every transaction is a purpose that matters. And it's why, together, we are making global finance move fast. With certainty. Wherever, whenever, and however it needs to go. For families, for economies, for all of us. For better.
Welcome everyone. Thank you for joining us for today's LinkedIn live session. I'm Alex Alder, Insights and Proposition Development Director here at Swift. And today we are going to be discussing some of the results from recent Swift market research on the low value payments market, which is an exciting topic that I'm sure you are all interested in. Just to give you a bit of context around what this research is and what it's about, we have been conducting over the past months research with both consumers and SMEs to understand what do they value most when they are sending payments abroad. We did the research in 8 global markets to be able to get a better understanding of what's important to them, and obviously spoke to a mix of participants both on the consumer side and on the SME side as well. I'm also delighted today to be joined by Marc Recker. Marc is the MD and Global Head of Institutional Cash Management Product at Deutsche Bank. Thanks for joining, Marc. Over to you to introduce yourself, if that's okay.
Yeah, thank you, Alex, for the invitation. And it's really a pleasure for me to be here with you all. Being part of the global transaction banking world, I think it's very important that we articulate the next kind of opportunities in the industry. I'm really happy to be here. For myself, I'm actually based in Frankfurt, working for Deutsche Bank, but currently, and apologies, let's say, for that kind of timing perspective, I'm currently based in New York for a Global Client Conference, but really happy to be here with you today.
Great. Thanks for joining, Marc, and welcome again to the session. I thought it was also worth mentioning before we dig into some of the content and the detail, as this is on LinkedIn, we do have a LinkedIn live stream. So as we go through today and discuss some of the concepts and topics of discussion, please feel free to add questions into the LinkedIn live stream. And we have some time at the end of the meeting today to be able to discuss some of those questions, and we'll answer as many as we can. So please feel free to add those questions as we go through. Okay, fab, let's dig into it. I've got a few topics to discuss, some data to share, and then we'll have a little conversation around what that means for the community. So if we have a look firstly and delve into our first topic of discussion, with the research, we're trying to understand firstly what is important for end users, so consumers and SMEs who are sending money around the world. So understanding what factors influence the provider that they choose when they're sending money. So if you have a look at the data on this first slide, just to delve straight into it, we see here a couple of important things. So we asked through the research, what are some of the core drivers for how you choose an international payment provider? We've got the consumer data on the left, the SME data on the right-hand side. And a couple of interesting things emerge through this. So firstly, from a consumer and SME perspective, we're seeing security and trust coming out as really important factors. That means that the payment process is secure and that they trust the provider that they use. So both of those things kind of go hand in hand. And we're almost seeing those as hygiene factors here through the research. So if consumers and SMEs don't feel that their provider is offering them security and trust, then they maybe wouldn't use them in the first place. So that's coming out firstly is the core theme here. We also see transparency coming out really strongly. So number third on the consumer chart on the left, second on the SME chart. And what that means is that both consumers and SMEs really value having upfront transparency on both fees and also FX that's going to be charged to them. They don't want hidden surprises. They want to be able to understand that when they're upfront making a payment. So that transparency is really important here too. For SMEs, we have an additional nuance come out here, which is around integration. So SMEs are saying through the research that they really value the payment process being integrated into systems that they use. So they may be using a payroll system or an ERP system or the like, and they want this payment process to be integrated in that system so it's as easy as possible for them. Other factors coming out here like speed and traceability. Interestingly, when we look here at the overall factors of importance, fees and FX do drop slightly further down the list, although we will discuss those, I'm sure, throughout the presentation. And there's some data later on to look at where and how they might be important. But broadly speaking, these factors are the ones that are driving provider choice. So when people are selecting who to use, these are the factors that are underpinning that usage. I think based on this data, Marc, I wanted to ask you a couple of questions from your perspective, really, having seen this and understanding and relating to some of the conversations that you have with your community. So I guess my first question is, what are some of your key takeaways based on this key finding? Are you surprised by the ranking of the results? What do you think when you see this?
Not really, Alex. For us, I think the results back up what we were already assuming. It's more important how we are reacting as an industry to these results. What are our options? Our view is leveraging the existing strengths of the industry combined with tweaking existing work that has already been carried out, for example, with Swift GPI. Important to note is that it's not only about technology. It's about different kind of existing market practice, and ultimately we need to respond clearly to the actual market customer demand. And the piece, for example, take the project that you're working on together with the industry of Swift Go, is in our view one of the most promising initiatives that can fulfill these requirements with a relatively easy implementation path. And this is very important because actually we are a network business. And a single bank on a standalone basis can never change it on its own. It's finding the balance between innovation and reach. And that is for us really the most important point. And of course, it's not easy for banks because banks are potentially fearing of getting margin compression even more. But it's so important that we tackle that piece because if we don't react now, then we may lose it all. And that is for me the piece. And my conclusion on that one, we have it in our own hands.
Yeah, it's a great point, especially around some of the competitive dynamics and how they're changing. I guess my follow-up question to that is, how are you as Deutsche Bank thinking about this and adapting your own offering in order to try and, I guess, meet the needs of consumers and SMEs as we see them on the slide here?
Yeah, look, I'm taking it from the angle of a global clearing provider. As being one of the global clearing providers, we see ourselves as an enabler and ambassador for the industry to drive the change of the industry. From an actual offering perspective, we actually implemented the role as SwiftGo intermediary from the start on the euro side, and we are planning to do the same on the US dollar side. What we have actually observed in the last couple of months is the increased demand from our own FI clients that they actually take a look into the topic of low value payments and how we can support them of managing this project with themselves. And it's also more important to note that this increased demand from FIs is as well driven by the G20 initiatives that is also putting pressure on the industry to actually make better global payments overall.
Yeah, indeed. And it's interesting that transparency comes out so strongly here because that is obviously one of the key pillars and components of the G20 targets for 2027, indeed. Okay, perfect. Thank you. I'd like to move on slightly and shift gear onto one of the other core themes, because I think it's important to look at what's important from a customer perspective from two angles. Obviously, generically, what's important when they're selecting a provider, but also understanding how do we as an industry solve some of the pain points which exist for customers today. So this slide looks at or presented consumers and SMEs with a range of, I suppose, negative scenarios, right? Things that could happen, and in some cases do happen, in payment journeys today. We look at these negative scenarios and we ask them as part of the survey to rate what impact, if any, would these things have on your likelihood to use that provider again. And what comes out really strongly here is there are a number of factors which provoke quite a strong sort of emotional reaction from consumers and SMEs. So the strongest driver of negative service discontinuation here is hidden fees. And we see that coming out through the data. So the majority of consumers, 71% of consumers, 69% of SMEs say that they would not use a provider again if hidden fees were applied to a transaction. The second biggest driver here is exchange rate. So if there is a lack of clarity around exchange rate, again, the majority of consumers, 69% and 69% of SMEs, say that they would not use a provider again. And indeed, those two negative experiences provoke an even stronger reaction than the payment not even arriving, which is still a negative reaction here, but the payment failing to be delivered falls down into number 3 in the ranking. I guess what this says to me is that there are obviously a number of factors that, as a community, we need to solve for. So I guess, Mark, are you surprised at how strong an emotional reaction these negative experiences causes? You know, with hidden fees being the top driver here, even more so than the other pieces around the payment not arriving. Are you surprised around such a strong reaction?
I would say not surprised. It's clearly a top priority from client to have the transparency point, being it hidden fees, being it hidden FX rates. But on the other side, it's also clear it is not that banks would not earn anything anymore on a payment. Clients are willing to pay, but they want to know it upfront. And like I said earlier, it is still in our own hands to change it. It is a difficult path, but not an impossible path.
Indeed. And to that point, from a short versus long-term perspective, and the question of how easy are these things to fix, at an individual bank level versus a community approach, and you've touched on some of the initiatives which we're doing on the Swiss side, of course, but how urgently should providers, banks and others, be addressing some of these challenges, in your view?
I think it needs to be discussed quite urgently. And the most important piece is not discussing it in silos inside the bank. You need to get the right people involved. You need to have the network managers that are buying services from other banks. You need to have the product people. You need to have technology people. It's a cross discipline that needs to happen in a bank to define actually the strategic way how to tackle these issues. Yeah. And then once a bank has a certain view, through the collaboration that we have very well experienced with Swift, that is something that needs to be grown then as a community effort.
And on the piece around having a broader conversation within the bank around some of these issues, do you have any words of wisdom or advice or any reflections to share, having been through this journey yourself, with the initiatives and the work that are going on the Deutsche side?
Yeah, actually, it is putting the client demand, putting the market demand at the center. And that is not even a function inside a bank, inside bigger banks, that can solve it on a standalone basis. You need to collaborate. And of course, you also need to take decisions. You may take decisions that you would earn something less on a single payment, but in the long run, keeping the client happy, getting potentially additional volumes inside the banks makes the more medium-term business case positive.
Indeed. Balancing that thinking, no doubt, is a challenge. Great. Thanks, Mark, for that. It's really useful to have your views and insights. So that this topic looked at what are some of the pain points or the things that we need to solve for as a community. And clearly the fee and the transparency piece comes out really strongly here. If we move on to talk about the next topic, I guess the purpose of sharing this insight on a preview basis is to provide some outcomes for everyone joining. So I wanted to show some data really focusing on what are some of the key outcomes for the financial community. So one of the questions we asked as part of the research was around motivations for using more than one provider. So here we're talking to consumers and SMEs and understanding from a push and pull factor perspective, what pulls them to other providers. You know, the data on the first slide looked more at what's important, and here we have a bit of a nuance coming out and some other themes coming out. So some interesting things emerge here. In the top three factors, we have consistency across consumer and SME. So the speed of the transaction, faster transaction, comes out as the largest driver, the largest motivator for consumers and SMEs who are using more than one provider. Lower fees comes out too, so that competitiveness, we don't see the FX come out so much here, but the fee basis is number two for consumer, number three to SME. And the ease of use is coming out really strongly here, which obviously links to the overall user experience, but also to some degree the embeddedness of this payment journey and how easy it is for customers to be able to make a payment. You know, what's the end-to-end experience look like? What's interesting when we look at this data is that it's slightly nuanced versus the chart before. So we saw on the previous chart how fees and particularly FX fell a bit further down in the ranking. That means that unconsciously, consumers and SMEs don't value those factors as importantly as some of the other factors which we looked at. But here we're really looking at switching factors. And I haven't put this on the slide to not overwhelm with detail, but we saw this theme coming out of the research quite strongly in that customer loyalty is no longer a given. So when we look at motivation and different providers, what we see is that the majority of consumers and SMEs who are using a bank today would consider using a fintech if that fintech offered them or matched the offering that their bank gives them today. Equally, the reverse is also true. So for those users who are using a fintech today, the majority said they would be likely to consider using a bank instead if their bank matched the service offering that they currently get today from a fintech. So you see this interesting balance come out in terms of customer loyalty because customers seem to be fairly open to switching, considering alternatives, and are primarily motivated by what's going to really give me the best package that I want as a customer. So that's where this data that you see on the slide is really interesting because what we can take from that is that customers don't seem overwhelmingly loyal to a provider, and actually the speed, the competitiveness around fees, and the ease of use are three factors that are driving to some extent push and pull between different types of providers. So just wanted to share that, and I guess Mark, from your side, when we look at these factors, so the speed, the ease of use, and the fee, and to some extent the FX piece, how do you think the community can solve for some of these things, having been through that journey yourself? And what are some of the building blocks to enabling improvement in these areas?
Look, I think we need to be also very transparent on within the industry itself. I do believe that the speed issue that has already been tackled since a couple of years. And actually the industry has shown that we can do fast cross-border payments across the globe. Since we have Swift GPI tracking available, we actually see how fast we are. Of course, it doesn't stop there. We have to getting better, but also initiatives, for example, like pre-validation transactions before actually sending the transaction will help to bring this to the next level. But on a building block perspective, I do believe every bank should have an open mindset and actually the willingness to invest. That does not only mean technological investment, but also investment into the future. And most importantly, as well, the collaboration across the industry, because the biggest asset we have, as I said earlier, is the network and reach. There is nobody else across the world that can reach as many accounts as the correspondent banking industry can do.
Indeed. And on the piece around the industry investing and I guess looking at these factors and looking at what they can do and what initiatives that they can pull on, what would you say or what advice would you give to banks listening in today who might be interested in some of these topics and themes? They understand and relate to some of the data, having received customer feedback that reflects this. They want to do something and they want to invest in these areas. What would you say to those banks who are interested but maybe haven't fully committed on transforming their offering in these areas to date?
Actually, is looking at their own respective data. Think about the worst case scenario. What if they would lose all of this data because the clients would use somebody else, and that you have shown as well in the graph? But also turn it around. What are the opportunities, not only to protect and also to win back business? I think it's important that banks do tackle that issue across the different functions now, because the opportunity is still there that we can get out very successful from this journey.
Mm. And why is the time now, do you believe, as opposed to waiting? Do we see the pace of change increasing?
Look,
What impact is that having on the community? Why invest now? Why not wait?
I think waiting is always a problem. The problem is for the industry. Like I said, the industry needs to move at a certain pace as an industry and not only a single part of the industry. That is very important that we can showcase to our clients that the banking industry can actually deliver. And that needs to happen now. The thought process needs to happen now, and you can definitely rely on the bigger GTBs across the globe to support the rest of the community to be successful on this journey. But the thought process in every institution should start now, and they should have a clear strategy around how to tackle the topic of low value payments within their own environment.
Indeed. It's a really good point. And the other question I have around this is, I guess when we look at the outcomes here and the role that industry cooperation and has as part of this process, how valuable do you think it is for kind of sharing, coming together as a community to discuss these topics and talk about them? Because I guess when we look at this from a business case perspective, we're looking bank to bank at what is the argument for investing in low value payments, but actually is there value in tackling this at a community level instead? And if so, how do we better band together as a community in order to talk about, share knowledge and be able to band together and strengthen the case?
What we have observed since 2016, 2017, since we launched with GPI, since we worked together as a community to deliver better cross-border payments for our clients, was actually the increased level of collaboration across the industry. And that is actually helping as well in this area of low value payments as well. Because we discuss things that are in the non-competitive space. And that is important that we share information, we share experiences, but also actually share the pain between the community to see what are the actual challenges for certain pieces of the community. So I do believe we can only solve it as a community effort and not on a standalone basis.
And of course, we're here at Swift to help with that, to be able to represent the community and bring together views and share knowledge and so on and so forth. That's great. Okay, we've got just about 5 minutes left now. I'm going to have a look at some of the questions that we're receiving in. Maybe we can tackle some of those in the last few minutes that we have of this presentation. So there is one for you, Marc, which I think you have partly answered already. How quickly do you see the market changing and evolving from a competitive standpoint, both in terms of customer expectations and also the diversity of new entrants, and how concerned are you?
Look, I'm not concerned because I think competition is driving innovation. And that is very important. I think it's good to see what non-bank providers have already been created as a kind of a client experience for the end clients. Banks have tackled that journey to be able to offer similar kind of services as well. And that whole competition goes vice versa, because you have also to think away. Non-bank providers use as well banks for certain kind of services to be successful as well. So it is not only competition, it's also collaboration amongst the different industry players. But change is also not, there is not one size fits all solution. It may be that certain geographies are potentially a bit later than other geographies, but the principle needs to be there that we move the industry forward.
Yep, indeed. Great, thanks, Mark. There is another question here, which I think is for me. So someone's asked, fees seem relatively low down in the rankings, but fees do come up as a factor later. What's the difference and what explains this? So the first data that I showed looked at what are the factors of importance when consumers and SMEs are choosing which provider to use. So as part of that, we used a research method to be able to trade off the different factors against each other to come to the overall spread of rankings. So we're not asking necessarily, or we didn't ask consumers and SMEs to rank everything high to low. What that enables us to understand is that they are unconsciously the things that are important to them. And that's where we see maybe fees and effects being less important than others. On the other slide that I showed, those fees especially was coming out more important when looking at what are the considerations for using more than one provider. What that tells me is that perhaps from a pull factor perspective, providers may be aggressively marketing around some of these topics, the piece around speed, the piece around ease, the piece around fees. So it's not necessarily reflective of the real offer or the real comparison, but from a perception basis, customers are being enticed to alternate offerings based on some of those factors. So for me, that explains the two, and we see some of that marketing coming out, which is driving some of those factors being the ones that involve switching. So hopefully that answers your question there. There is another question that has just come in, which is for you, Mark. Will instant payments replace most of end-of-day payments, changing the liquidity management?
It depends actually. On a domestic level, you see across the globe different geographies where instant payments are more advanced or some less advanced. I think there is a huge difference between instant payments on a single jurisdiction basis compared to the cross-border basis. Because instant payment on a cross-border basis needs to be tackled completely different, because there needs to be also tackled differently from a compliance and anti-financial crime perspective. You will never achieve the same piece if you as a bank in the middle need to do much more sanction screening than, for example, on a domestic one. So I do believe instant payment is definitely something which has its advantages, which has its use cases. But when you look, for example, even when you look at two big corporates, not all of them are happy to get instant payment 24/7, because they want to manage their treasury and liquidity position at a certain moment in time. So there is still some discussions happening across the industry. I would not say there is 100% instant versus 100% non-instant. It's somewhere in the middle.
Yeah, good point. And one of the interesting things that came out through the research, which I haven't presented today, but it's still around 20% of consumers and SMEs are expecting instant. So it's a minority. I would imagine it, grows over time, and that expectation increases as, in our everyday lives, everything becomes instant and one click and one touch and so on and so forth. But for now, it's still around 20%. There is another question that has just come in as well. What is the geographic distribution of your survey research, since every region of the world is on a different point of the innovation and transformation journey? So for this research, we surveyed 8 global markets. I'll just tell you which those markets are. So they were Australia, China, Germany, India, Saudi Arabia, South Africa, the UK, and the US. So they're really strong sending markets, and they represent a good proportion of flows sent across the SWIFT network and more broadly flows across the globe. So 8 markets, and you're right, every region of the world is on a different point in their innovation and transformation journey. Through the research which we will publish shortly, we're also publishing the regional breakdown, so we're able to see through the numbers how some of the expectations and needs and so on and so forth vary in each of those 8 markets. There is some variation in terms of what's important to consumers, in terms of their level of confidence and so on and so forth. So you'll see some of that emerge. The data I presented today is just the global averages, of course. Okay, so we are at time. We are at past. I wanted just before we close to show a slide with some further information on. So we, as I said at the start of the presentation, are showing these results today as a bit of a preview of what's to come. We do have the insights ready to go, and they will be released shortly. You can scan the QR code on the screen now, enter a few details, and we will let you know and notify you when the results are available. So this is a way of being able to, I guess, pre-register and receive the results as soon as they are available. Like I say, there's lots more in there than just the 3 slides which we shared today for the 30-minute session. And of course, willing and really excited to share that with you all. So thank you all for joining the session today, and thanks especially to you, Marc, for joining for this conversation. Really appreciate your insights and opinions from the bank side. So thank you very much. I wish you all well.
Thank you, Alex, for the invitation.
You are more than welcome. Wish you all well, stay safe, and goodbye.